Hello, Making Sense listeners. Today, we're handing over the feed to EMEA in Conversation, a JP Morgan podcast featuring in-depth interviews with industry leaders on what's happening across Europe, the Middle East, and Africa. Making Sense will return to its regular schedule in the next episode. But for now, enjoy this special episode from JP Morgan's EMEA in Conversation.
Every transformation starts somewhere. Every decision shapes what comes next. Welcome to EMEA in Conversation. I'm Patricia Brolly, EMEA Head of Merchant Acquiring Product for JP Morgan Payments, and I'm joined by Kieran Walsh, Europe Head of Corporate Sales at JP Morgan Payments. Today, we'll explore how evolving payment solutions and merchant acquiring strategies are shaping the commerce landscape, helping businesses grow, scale, and stay secure in an increasingly digital marketplace. Little warm-up question for you, Kieran. If today's commerce landscape were a personality, constantly evolving, fast-paced, how would you describe it?
I'd say it's like an always-on multitasker juggling channels, pay methods and markets and expected to perform flawlessly across them all.
Kieran, when we talk about digital transformation, we often talk about it as big and abstract, new experiences, new technologies, new products. But in reality, transformation shows up in a very specific moments where a customer makes a decision, moments where friction either appears or disappears. And arguably the most important of these moments is the checkout. So let's start there. Why has checkout become the moment that matters most?
Well, I think checkout is the moment where digital transformation actually becomes tangible. So you can invest in discovery, you can invest in user experience, you can invest in front-end design. But if the payment experience is clunky or if it's even limited, that's where it all falls down. And customers don't think about those component parts. For them, they're simply on one journey.
That's interesting because historically, checkout wasn't seen that way. It was more operational.
Absolutely. I guess a few years ago, the question was, can I take a payment? The question now is much bigger. It's actually, can this experience drive value? That shift is huge.
And in EMEA, it becomes even more complex, right?
Absolutely. There is no such thing as a single EMEA customer. There's different expectations, different local preferences, different regulation. And these things are all layered on top of each other, bringing an additional complexity that businesses have to scale.
Exactly. So let's talk about growth, because this is where the mindset shift really comes in. How does checkout move from being operational to actually driving revenues?
For me, it's all about impact. Even the smallest changes at checkout make a very big difference. So reducing friction, adding local pay methods, improving speed, all have a very significant and positive impact to conversion rates.
So marginal wins can actually have a big impact.
Absolutely. The best businesses are constantly optimizing. They are testing, they're learning, they're refining. They understand that checkout is a dynamic journey, or it's a dynamic part of the overall journey. It's not a static endpoint.
You're absolutely right. Businesses have to keep innovating. They have to keep looking at the journey end to end, looking for improvement areas. So what are some of those improvement areas and missed opportunities that you see?
I think the most obvious and the one that we see the most is not localizing enough. If you don't offer the most relevant local pay methods, then you're overcomplicating the experience. The reality is that less is more. The most intuitive checkout experience is what you're seeking. You'd like it to be almost invisible, but that's impossible. Checkout won't go away. But I think if you can deliver a really intuitive experience, then that's the way to delight the customer. Finishing a checkout when that email pops up that confirms your order and you're there thinking it's finished already, I think that's what we're all looking for. And that's the type of experience that will bring us back.
Kieran, from a customer perspective, the checkout process should be simple, but it's actually anything but. What's actually happening beneath the surface?
Actually, an awful lot. And we're fortunate enough. Again, this is somewhere where we spend a lot of time with clients, but you have payment orchestration, you have the fraud management, you have compliance, general security, infrastructure, all operating behind the scenes and all have to work simultaneously in partnership together flawlessly. It's an area we know clients spend a huge amount of time because, again, getting that right, getting that perfect, which is crucial to how they run their businesses, is very, very challenging.
So the smoother it is, the more complex actually behind the scenes it is. How do businesses juggle innovation with stability?
That's the challenge. Customers absolutely have to keep innovating. It's really important. It's how they maintain their business. It's how they maintain their advantage. But it cannot come at the expense of security or reliability. So they want to add local pay methods. They want to remove friction so that they can do things better. They can route transaction flows based on issuer performance or based on geography or based on cost. And, we know from the amount of time we spend with clients, particularly in the ongoing reviews that we manage with them, how important these things are. They measure them very carefully. And it's critical actually to really how they measure the success of how they perform in their business.
You mentioned localized payment methods, and I think that's a super important point. In France, French customers expect to pay by carte bancaire. In Poland, Blick, Switzerland, Twint, the list goes on. How do you see those approaches differing by market? And actually, maybe France is a great example of that.
What works there will not work in the UK and Nordics. We know and we understand that well. And actually, more broadly, what we're seeing is a move away from this idea that a single setup will allow you to serve all of your customers everywhere. So if you're not offering your preferred pay methods, you're not really competing. And in fact, the opposite, you're dramatically reducing your addressable conversion.
And it's that adaptability that can really drive performance. And EMEA tends to be bucketed under one region, but it's actually more than one region, different countries, different languages, as we've spoken about.
EMEA is a convenient label, but it's an entire region. It's a large number of markets. It's even a large number of different cultures. So not only is there no single EMEA client, there's no single EMEA commerce experience. And the drivers for that are the same. The expectations are different. The regulation can be very different and often is. And there's a different expectation around pay methods. And so the customers that can scale across that fragmented landscape are those that are really going to be able to say that how they manage checkout and how they handle payments is actually a real strategic driver of growth for their business.
It's easy to see how that can become a stumbling block for merchants trying to scale and win in Europe. So when does the checkout actually break down today? What are you hearing from clients?
So it should be a trickier question to answer, but actually our observations are pretty consistent. There is a conflict. The businesses need to grow as quickly as they possibly can, and that often means scaling markets. And so whilst the front-end experience is often really good, if not exceptional, and so the checkout often becomes the weakest point in the journey. It manifests in a number of different ways. It can be poor payment experience generally, or it could be even a mobile optimization that's far away from what it should be. And so customers drop out on this journey. And it's really interesting because the challenges that are posed, they're not insurmountable, but the experience just isn't living up to what customers expect. And so ultimately they drop away from the experience and you lose them.
Let's unpick one of the challenges you've mentioned, Kieran, which is regulation. And I say challenges because regulation can also be an opportunity. If you think about PSD2, AML, DORA, long list of regulations. What are your views on that? Challenge, opportunity?
Both. Actually, you framed it really well, I think, Pat. So it can absolutely slow you down, but there's no question that it's driven businesses to be much more innovative. You mentioned PSD2, so that, that directive effectively opened the door for new pay methods, and it also led to a much more widespread data sharing, which allowed new people to enter into the payment space. But we do know that those that use it as a point of innovation have some market advantage, and it's really valuable.
And there are some great examples of that globally. You look at Pix in Brazil or India or even Bahrain with real-time payments. Huge innovation. It's been regulators that have been driving that.
Absolutely.
So how has PSD2 changed the payments landscape? And what does PSD3, even PSD4 hold for us?
We're all very, very familiar with the idea that our mobile device plays a meaningful role in how we complete transactions, and we're completely comfortable with it. It's been massively beneficial to businesses all across Europe.
And massively beneficial as well for collaboration, seeing schemes, issuers, acquirers, third parties all working together.
Absolutely. PSD3 is building on that. It's certainly the drive there is to make transactions much more secure and to reduce fraud, which is welcome for everyone. And you even mentioned PSD4. It's on our radar. It's something that regulation was something that kind of made us sigh. And I'm sure for some it does, because it always presents challenges. But ultimately, it makes the experience better. It's good for business. And those that do it well, once again, they steal a march in the market. And it's become really important for that.
So regulators are actually a force for innovation. Bringing them in early, partnering with them can actually drive real change in the industry.
Yeah, there was absolutely, showing my age and going back a bit further than I'd like to, but there was a resistance to regulation. New businesses came to market and their goal was really not to tie themselves up in regulation. That was something that perhaps they could outsource to a bank. It became clear that it was almost impossible for that to be the case. And so, look, I feel that many have embraced that regulation. They understand it. They know it's really important to how they do business.
Because ultimately, we all want what's best for the customer.
For sure. And like I say, that trust component that we all take from knowing that there is, reasonable regulation across the landscape is very important.
And regulation can actually drive product development. Regulation in itself is very fragmented. There's global regulations, there's Europe-wide regulations, then each country has its own interpretation of the regulations. And I think our role in product when speaking to clients is trying to demystify or simplify that for our clients to understand. And that influences what products we offer to what client segments in what countries.
To add to that, the sheer scale and size of what we do globally means that we have a proximity to regulators that others do not. And so whilst we have to understand and abide by regulation ourselves, it's the heart of everything that we do. We're also increasingly bringing an understanding of that regulation to clients. So it's become a core component of what we do.
We talk a lot about innovation economy. What does that actually mean in the context of commerce and payments?
For us, innovation economy is the part of the bank that serves startup, venture-backed companies. They're usually high growth and tech forward, and the investors that support them.
The future FTSE companies.
Absolutely. That's the hope. They're early adopters. They push the envelope. And so when we serve these companies well, it makes our platform better too. These are businesses that will launch across geographies as a first phase. And so it puts a tremendous strain on payments. And so being able to scale across markets with agility has a real focus for them. The way they operate has really even dictated the way that we serve them. In the same way that we adapted to how we serve fintechs, we do the same for innovation economy clients because they have an expectation of agility and speed.
And can you give an example of one of those businesses that have launched overnight and have driven that shift?
Possibly the easiest example to consume might be a media business or a streaming business. They will absolutely launch across geographies at the same time. They need to offer localized payment services, and it's super important in a business where there may be subscription. So they need to launch locally, but actually they need that experience to feel the same. So that's, I guess, a really good example of, what can happen and how the conversation you have on one day with a client can change very quickly given their own strategic agenda. I already mentioned subscription services or marketplaces. The reason that's important is because those consumers have already made their buyer choices, their buyer preferences. And so those businesses really need payments to operate with invisibility in the background and seamlessly.
So we understand what innovation economy is. What challenges do they face, particularly when scaling up?
It's a great question. I mean, it's something that impacts other businesses too, but I think risk and fraud is something that manifests itself front and center with these types of businesses. So having real-time monitoring is critical, and being able to use data and analytics to make sure that the business is as secure as possible is really, really important. The other thing, and we touched on the Payment Services Directive, which is obviously really important in Europe, but it's staying on top of regulation. As you step into new markets, it's really important that you understand your regulatory obligations in each of those. And that's not an insignificant task.
And that's why it's really key to have partners in those markets who speak the language, have relationships with the local regulators that can decipher the regulations that have come out and help our clients.
You've just described why we play such a key role.
So looking ahead, where does checkout go next? What's the next evolution?
Data is the big one. Payments contain really valuable insights, and we're seeing businesses starting to use that more and more. We're moving from AI that suggests into AI that helps execute. So instead of just showing you options, it can suggest pay methods and it can confirm prior information.
So taking a real life example, I'm booking my summer holiday. AI would simply give me a list of the hotels, but actually what it wouldn't do and what an agentic agent would do is actually proactively book those hotels for me based on my specific requirements. Is that fair?
It's fair, but also including permissions and safeguards that are understood.
So I've just talked about travel, but where do you see this showing up for real, i.e. not futuristic? Is it things like subscriptions?
It's absolutely subscriptions. It's repeatable journeys where the customer intent is clear and where speed really matters.
And what has to be true for customers to be comfortable with that? What are the non-negotiables?
It's control and clarity. Customers need to know what's happening, what they're agreeing to, and that they can step in at any point.
So it should be effortless, strong controls, authentication and transparency.
Absolutely.
So Kieran, the final whistle, looking ahead, what's going to define the next phase of commerce?
The direction of travel is towards more seamless, invisible experiences. But checkout won't disappear. We'll become faster, more intuitive, and more embedded across the entire journey.
Brilliant, Kieran. Thank you so much for joining me today.
Pat, it's been an absolute pleasure. Thank you for having me.
Thanks for listening to JP Morgan's Making Sense. If you've enjoyed this conversation, share your feedback by leaving a comment or review wherever you listen to podcasts. And be sure to follow our channel so you don't miss an episode.
Copyright 2026, JP Morgan Chase & Co. All rights reserved. JP Morgan Chase Bank, N.A, member of FDIC. Deposits held in non-US branches are not FDIC insured. Non-deposit products are not FDIC insured. All rights reserved. The statements herein are confidential and proprietary and not intended to be legally binding. Not all products and services are available in all geographical areas. Visit jpmorgan.com/payments disclosure for further disclosures and disclaimers related to this content. The video podcast guide is confidential and proprietary to JP Morgan and is provided for your general information only. It is subject to change without notice and is not intended to be legally binding. Any services described in this video podcast guide are subject to applicable laws and regulations and service terms. Not all products and services are available in all locations. Eligibility for particular products and services will be determined by JP Morgan Chase Bank, N.A, or its affiliates. JP Morgan makes no representations as to the legal, regulatory, tax, or accounting implications of the matters referred to herein. Any mentions of third-party trademarks, brand names, products, and services are for referential purposes only, and any mention thereof is not meant to imply any sponsorship, endorsement, or affiliation. JP Morgan and JP Morgan Payments are marketing names for certain businesses of JP Morgan Chase & Co. and its affiliates and subsidiaries worldwide. JP Morgan Chase, N.A, organized under the laws of USA with limited liability. The views and opinions expressed herein are those of the author and do not necessarily reflect the views of JP Morgan, its affiliates, or its employees. The information set forth herein has been obtained or derived from sources believed to be reliable. Neither the author nor JP Morgan has any representations or warranties as to the information's accuracy or completeness. The information contained herein has been provided solely for the informational purposes and does not contribute to an offer, solicitation, advice, or recommendation to make any investment decisions or purchase any financial instruments and may not be construed as such.